Hello, Adrian, and welcome to Portfolio Room podcast, where we explore the trends of private equity impacting today. I'm Gleb Ismailov, private equity CFO specialist and head of Benelux, and I'm very excited to have you today, Adriaan Visser, CFO of Tyson Bowen, portfolio company of Quadrum Capital, and you had experience working for portfolio companies also of CVC and KKR. And today we are going to discuss the decline in private equity investments within the construction sector. I think it's a very interesting topic for everyone today. So please, Adrian.
Yeah, thank you for having me, Gleb. My first podcast, so welcome to the audience as well. Thanks for having me. I'm really honored to be on your podcast. And I'm really looking forward to discussing building and construction trends with you today, Gleb. So
Perfect.
take it away.
So I mean, I think as probably we all see now that, and according to the latest S&P as well, global market intelligence data, which correlates well with private equity data as well, that number of private equity deals in the construction industry fell by more than 50%. What do you think are the reasons behind it?
Yeah. I think it's good to look into the cyclical nature of building and construction, Gleb, because I think that there are two reasons. Well, the economic situation, especially for building and construction, really turned around, let's say, last year, start of this year, where I think building volumes, at least in the Netherlands, if you look at housing, where my company specialized in the higher segment of the housing market, I think it's the business is minus a lot. And if you look at newly built homes in the Netherlands, I think last quarter there was like 3,300 homes being built, where the target was around 20,000 or maybe 15,000. So, but the volume in building construction really dropped by a lot.
Yeah.
And that's one part. So the market is really unfavorable for the coming years. Then also investing in not so well performing companies is, I
Yep.
think, more difficult. The other part was, I think, the previous year, as building construction is this very cyclical business. Yeah, company profits soared, and you pay a multiple over these very high numbers. So if you want to buy a company in building and construction or building materials, most selling parties are really looking for a high multiple on the profit of the past 3 years, which was kind of high. So you just pay too much, and currently I don't think that the sellers are moving down the prices to the level the buyers are willing to pay for a new company. So I think this is the mismatch between the prices people are willing to pay based on current performance versus the performance of previous years. And this needs to settle down, and then we might get a little bit step up in deals. But market outlooks for a lot of companies in building and construction is unfavorable, I'd say.
It seems like when the before recession, everyone tried to invest into construction industry in that sense, and it was very popular. But once the recession comes in, you can see many companies filed bankruptcy in that sense. So it is a difficult industry for sure.
I worked in a very large construction company as well. I started my career there.
Yeah.
And during 2006 was okay. Between 2006 and 2013, market also declined by 60%. So it's really cyclical. Either it's booming or it's downsizing, really downsizing and cash management.
Agree in that sense. And what do you think specific trends would be and technological advancements which are driving private equity interest in the construction sector?
Well, I think the trends,
like during the cycles, like everyone obviously knows that in 2008 as well, that there was no point into investing into construction industry because again the market dropped, but it seems like everyone forgot about it and started doing it again. What do you think it drives them?
Well, there was a lot of technological advancement lately on sustainability and energy transition, and I think these kind of companies are still investment worthy for private equity parties. If you're looking at solar panels or other of these transition companies bring us to a climate neutral future, a climate neutral housing, and those kind of companies who can provide something in these kind of segments. These are really investment worthy because they have a future for the coming 10, 15, 20 years at least, and will have growing business. For the regular construction business, I think that the trend will be downsizing and really taking care of your construction portfolio, because there's a real risk of bankruptcy or not being able to pay back the loans if you have a leveraged buyout of the company. Interest rate soars from 1% to 5, 6, 7% sometimes now if you have to refinance.
Yep.
So that can be an issue on the cash flow of a company, especially when you have a slash in of 50% in your turnover, so to say, and you have a high debt to equity ratio, and you have to pay 4 times more for the interest rate. Then your cash flow is really, really, really tight. And if it gets too tight, then companies go bankrupt. So I think that will be the two trends. So keeping your companies healthy and safe, and the other part is just invest in climate neutral companies or companies who will help make the energy transition and in the building environment, so to say. Those are good.
You actually mentioned,
Will be good investments. So very, very good investment if you for the right price, of course, for private equity
if you get
parties.
it cheap in that sense, and then you can make a good exit after the
You can
recession.
have a real buy and build strategy, and if you take a look, for instance, solar panels, there's lots of room to grow in the Netherlands. We were more or less saturated, but if you look to Germany or in other countries, they have a long way to go. So loads of sales there, for instance, or future sales,
Yep.
future
But don't you
opportunities.
think though, don't you think the topic, by the way, you mentioned about, ESG in that environmental sustainability, in that sense, do you think that this topic as well in construction went a bit on the background because, everyone's thinking about profit in the first point, I think, right?
I think a construction industry is not really the industry that really, by itself, by nature, really is looking to ESG.
Yeah.
But it's becoming more and more. And the legislation in the Netherlands for larger companies, you have to have ESG. So
Yeah.
my company embraces it. So we're looking at solar panels, electrification of machinery, those kind of things. But then also,
Yep.
if we wanted to buy a new truck for the company, but it has a big crane on it, and the crane only can run on diesel because the technology for the truck crane companies is not that far yet, unfortunately for us, because we really wanted to have an electrified crane for the coming 5 to 10 years.
Sure. Yeah. It makes sense that they're trying to implement all the
Yeah,
legislation is getting stricter. They're trying to
and
sustainability.
for the larger
And
companies, the customers really demand ESG and high
yep.
sustainability. So
Yep.
for the bigger companies, it's bread and butter.
Yep. Yeah, because I guess their profit is already kind of big, and they're trying, to tell them that guys you need to be more
Yeah,
sustainable in that sense,
that's
to
it.
use
In
the
that
sustainable
sense, it is. But
materials. Yeah.
the smaller construction companies, they're really backwater. That's at least my experience. Is they are very late adopters of climate and ESG measures, so to say. But the
Yep.
government really helps us and forces us the right direction. At least I think it's the right direction.
And I think for our investor, for our listeners as well, for not just CFOs but also investors, do you think in next 2 years, what do you think will be more interesting? Will it be more construction services or building materials production in that sense? Because I mean, construction services, as we mentioned at the beginning, is for sure it's more vulnerable in that sense, vulnerable in that sense to cycles, the P cycles. So.
But the building supplies as well, because if the demand falls, which is really happening this year, then also your price levels are really will go down. So your profit will go down, your volumes will go down. So again, I would not really focus on these two kinds of split, but more like into if you're really looking at the energy transition. If you have a company which is related to the energy transition, then your turnover is more or less guaranteed if you have a successful company to grow. And for the other companies, it's a cash management and most likely downsizing until the customers are really used again to higher levels of interest rate and the economy is turning up again. But
Sure.
for building and construction, it's foreseen in the Netherlands at least no improvement till 2026.
Yeah.
So 3 more years
Of hard timings.
marginal performance, market turmoil, yeah.
I think this applies as well to. I was talking with some investors from the DACH region as well. It also applies there. Many investors who are from DACH as well. They told me that and have investments in Benelux. They told me that construction industries as well. In the not in the it's at best essentially. So
No, it's a very exciting sector to work in because it's either it's rather growing very steeply or
yeah,
declining very steeply.
exactly.
So yeah, you can buy and build, and you can really focus on reorganization and downsizing. So both parts of the finance profession you can really excel in building and construction. That's what I also
Yeah.
like in the sector, so to say. It's really challenging.
Which is I guess that's why it's and that's private equity like it in that sense because they like the risks. Obviously, they like the high returns.
High
And
risk,
what do
high
you think, by the
reward.
way, high rewards? Yeah, yeah, yeah.
Yeah.
Because especially they show, and it's real in that sense that some returns, let's say, some companies which are listed publicly listed, and construction manufacturing, they went down a lot. But with this P market, right, because it's not listed, so therefore it's not as fluctuate in a sense from the investors outside. So it kind of keeps the price still, which is I guess that's why they like it. And what do you think is the impact of economical cycles on private equity investments in construction? And how do we kind of covered it already, but just a bit more. How do investors adapt to these fluctuations in the construction industry?
Yeah, I think that there's three parts in this equation for me. That's the push part for private equity. There's a lot of money available still, and private equity just needs to invest. So they always will be looking to new opportunities. So there's always an inflow of new money from private equity into the market, in the building construction market. That's one part. The other part is the economic part we talked about, minus 50% in residential construction, so to say. So that's I think about half of the construction volume in the Netherlands. The other part is the utilities, the roads, the public works, so to say. But for the residential areas, it's minus 50% or more. It's not a good market to invest in. And you really have to look at companies who are really making a lot of money and have a very strong balance sheet. That's the second part. The third part is the interest rates. The interest rates high. So if you want to do a leverage buyout of management or a leverage buying of the company, the interest rates really cut in the profitability of the companies. And I think also financial institutions are not so keen on granting loans to construction companies anymore. And if they do, they will be with very tight banking governance, so to say. So
Yeah, because
that's
this
a
year
challenging
it's
market.
risky.
Yeah, it's a risky and challenging market. So if private equity really wants to invest in building and construction, well, again, look for the energy transition companies. The other companies will be hard pressed. Yeah.
Yep, we agree in that sense. And can you explain, the typical investment horizon for private equity investments in construction, and how would it be different to other
Yeah.
industries, let's say to retail or to software?
Yeah, a little bit experience in that. Quadrum acquired Thuisenbouw in 2022, so we were recently acquired. And the time horizon of Quadrum is more or less indefinite because we're locally situated in an evergreen funds. So they're basically saying we're trying to keep us. But of course, if the price is right, we or the company will be sold again as usual. The other experiences I had in building and construction was between 3 to 7 years. Yeah, really also depending on the company. If you have to do a new strategy and turn around and really do a turnaround of management and profitability, then 3 years is a nice horizon. If it's longer, or if you buy it in the dip, then 5 to 7 years might be a good time horizon to invest in a company.
I see.
That's
So
my
I guess,
experience, but maybe your experience is much greater than mine, Gleb, because I just work for a few companies and I see several deals in private equity, but it's more maybe your
I'm
specialization than mine, actually.
well, you definitely know more in finance than me, and more in cycles and in investments. I just I hear things in the market, right, in the sense, because I have to talk with investors a lot.
Yeah.
But yeah, I feel like I remember we had this well conversation with one P house which invests a lot into actually construction industry, and they've said a very similar point to you as you have said, that essentially what P houses, obviously everyone saw the lesson of property crisis in 2008, right? And as you said, they always try to, when they buy the company at the dip, like now, basically essentially the recession, they always know that it becomes profitable once we go up again. It will be normal market, no recession. The key here is, I guess, to exit in the right moment, not because
Yes.
not to run towards the high profits, because with construction thing, you always think like, okay, one more year, it's fine,
Yeah.
one more year, but essentially you might be
Exactly.
late. Exactly, right?
Yeah.
As in 2008, you essentially you just might be late, even like by a month you might be late, and done. So yeah, I think, yeah, in that sense I totally agree with you. And this is more, we covered about construction today, we explained a lot more from, because you worked with, obviously, with Quadrum, with KKR, with CVC, so you clearly have a lot of private equity experience with big and mid cap P houses. What would you say, I think this will be an interesting question for all the finance people who want to proceed career in private equity, especially who are either finance directors now or just started a new CFO position. What would you say are the most important things to do in your first 100 days when you join a portfolio company of a private equity
Yeah.
house?
I think the most important is to build up your relationship with the private equity party. If you're new, if you're a private equity related finance director or CFO, then of
Yep.
course you have this relationship already established. The second part is really looking at your finance department and really build it up in the first 100 days. So you actually have the execution power to make the changes and drive the changes in the portfolio company and help increase the profitability and support the buy and build strategy, or the sales and the exit strategy of the private equity party, because finance is heavily related in the buying and the building, but also in the exit scenario, with cash pushes and really focusing on performance, so to say, and growing the company. And the third part was, my personal experience is get your reporting right, because private equity trusts you
Yep.
as a finance director or CFO, but you have to show the performance of the company. And if your figures are not clear, if your reports are not clear, yeah, the mistrust can really be between you and the private equity party, and basically they employ you. So better get your stuff together,
I feel like, yeah,
and
I feel
be
like,
able to show the financial results of the company, so they
yeah.
can also gain trust in you, build trust, and really see where their company portfolio or their company is heading to, and if it's meeting plan. So that's in the first 100 days. Get your reporting straight, get your team straight, and build a relationship with private equity.
I feel like, you, especially when you said the part about that, get the reporting to the right
Yeah.
standard. I think that's the most, important thing as well, because I heard so many times from the investors that, they might have a CFO who, let's say, wasn't from the private equity back, or even those who had experience in PE, but they can't just get it to the right PE standard for the investors to see it properly. Because essentially once you, as you said it correctly, that once if you do good financial reports, then it shows as well that you're very transparent, so that therefore
Yes.
you show your trust to people.
Yeah.
So that's it. Yep, agree. So Adrian, I knew that this discussion is going to be very good. I really
Thanks.
enjoyed our conversation today. I want to thank you, not just from me, but I think from the whole audience who will watch this episode, for your wisdom and lessons, because you already have achieved so much. And but on the other hand, you just started, to be honest, because you have so many experience to go through still. And I just really want to thank you for stopping by today at Portfolio Room Podcast. And I'm sure we'll speak again with you for another interesting topic as well. So
Thank you
thanks a
very
lot.
much. Thank you for having me, and audience and club
Thank
as
you.
well. Have a very good day. Thank you very much for having
Thank you,
me.
Adrian. Bye
Bye
bye.
bye.
Bye bye.